All right, so what is trading? Trading is the act of buying or selling financial instruments such as stocks, bonds, futures, a couple other things. I personally trade gold and Nasdaq. You are free to trade however you want, whatever you want. It's completely up to you, but personally, that is what I trade. So moving on, we're going to go into what is the market and who controls the market. So the marketplace is where buyers and sellers compete for market direction of an instrument. And so who are buyers and sellers? Buyers and sellers could be banks, institutions, corporations, retail traders like you and me, hedge funds, private investors. They all are under the trader category. So market direction is influenced by pools of liquidity, and a lot of people get intimidated when they hear liquidity and don't really understand that. A simple way to think about liquidity is just sitting money in the market. Liquidity is typically above obvious swing highs and swing lows, and they give you more of they act more as magnets for price. So market pulls towards these areas of liquidity because it needs these areas to make any type of significant stride in any direction. And so as we move towards these pools of liquidity, price leaves behind something that we call market structure. Market structure, excuse me, is the evidence of the competition between buyers and sellers. Okay, so market structure can be identified through three conditions: uptrends, downtrends, and consolidation. So an uptrend consists of higher highs and higher lows, where price continually gets higher and higher and higher. And a downtrend is where price consists of lower lows and lower highs. So it gets lower and lower and lower. And consolidation. Consolidation is that range between a high and a low where price isn't making any higher or isn't making any higher highs or any lower lows. That's typically a no trade zone. We don't really want to trade inside of consolidation because there's not really any real market direction. So markets don't trend in one direction forever. They go through the phases. So an uptrend can become a downtrend and vice versa, and each trend can start to consolidate. So as price continues to form, we tend to figure out how it's trending. If we are in more of a buying area, we should see an uptrend or a bullish environment. If we're more of a selling area and price is decreasing, we should see a downtrend or a bearish environment. And of course, if we're not seeing either of those, then we're more than likely in a consolidation zone, which is again our no trade zone. So to start off, you most definitely want to start with understanding higher highs and higher lows and being able to identify those in the market. Okay, I'll give you guys a second to look at this and write down anything you need to write down, and then we'll move on to the actual charts, and then I'll start showing you guys how to identify higher highs, higher lows, or lower lows and lower highs so that we can get an idea of what trend we're in. Okay, but before we move into that, let's break down the anatomy of a candlestick. So the body of the candle, which is typically the boxy part of the candle, the colored part of the candle, shows us the difference between the open and the close of that said candle. While the wick, which is the line that travels through the entire candlestick, shows us the highest point in which price got and the lowest point in which price got within that said candle. So a bullish candle means that it closed higher than it opened. So price opened at this level for this given candlestick and traveled all the way up and closed at this point. Now, the wick of the candle shows the peak at which price was. So that means at some point in time, price came all the way up to this level, didn't close, but came down to this level and closed here. Same for the bottom side of the candle. That means at some point, price came all the way down to this level, pulled back up, and closed up here. After a series of said candles, we typically get our market structure. A single candle is not really enough to go off of, depending on time frame, of course, because time frame correlation is another thing that plays a really vital part in trading that, of course, I will make sure that I go over very thoroughly with you guys. But for right now, let's stay grounded in the basics. All right. Now, For a bearish candle, it's almost the same, but it is simply opposite when it comes to the candle open and close. What? Why are we going? Okay, sorry. All right, for a bearish candle, it's pretty much the exact same thing, except the open and the close of the candle are switched. So the top of a bearish candle is typically where it opens, and the bottom of the bearish candle is typically where it closes, because in a bearish trend, we should be moving downwards. Now, the anatomy of a candlestick is pretty important because it determines how you mark up your charts, because our candlesticks is what ultimately gives us our market structure. So after a series of candles, we typically have swing highs or swing lows, um, which are characterized by higher highs or higher lows in a trend. So let's go back to an uptrend. So a swing high or swing low is what we call in the market where price reaches a level and switches direction. So we can see price came up, 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 paused here. Oopsies. We see price came up, paused here, and then started selling back down. This was our swing high, or our higher high, I guess. So as you can see, as candles form, we get market structure, and market structure follows that same thing of highs and lows being formed in that trend way that we were talking about. Okay, so as you can see, after a series of candles form, we typically get something in a price action similar to what we were characterizing in our trends. Excuse me. So here we can see price is trending downwards in a downtrend in a bearish type sentiment because we have lower highs and lower lows. We identify our highs and lows by major shifts in direction in the market. We see that price came all the way down to this low right here and had a major shift in direction that came all the way up here. So this would be our low or our lower low, and this would be our lower high. And these are in relation to our previous lows and our previous highs. So if we go backwards a little bit, we can see our previous low is here and our previous high is here. We still have that bearish sentiment that we follow in a downtrend. So after a series of candles forms, we typically have something like this. So anytime, especially on the higher time frame where price has a major shift in direction, that is your indication that this is potentially a swing high or a swing low. So to show you guys, price had came from this direction all the way down to this direction. Now I'm gonna mark this as my lower, well, I'll put higher low because this low is higher than its previous low. And here, from this point, we had a major shift from this point to this point, which is another lower high. So I'm going to mark this one as a lower high. And as we mark our lows and highs, we get something along the lines of a trend. And we always want to take part in identifying our trend because it tells us which direction we're going. So here on this time frame, I can see price is forming lower highs and lower lows. That happens in a downtrend. A downtrend consists of lower highs and lower lows, and an uptrend consists of higher highs and higher lows. These are the fundamentals. All right, so in a downtrend, you should not be making higher highs and higher lows. If you're making higher highs and higher lows in a downtrend, you might have to be ready to switch your bias because, again, trends don't last forever. So if price does have a breakout point where it does break a previous lower high, then you should reassess for potential buying environment. So after price breaks a high, it'll typically retest that level and then come back and continue higher, starting a new uptrend. And the same goes for downtrends. So you don't want to have lower lows, or the same goes for uptrends. You don't want to have lower lows in an uptrend. If price does break a lower low in an uptrend, that might be your sign to reassess for a potential bearish environment or a potential downtrend. So we'd see a retest of that zone and then a continuation down even lower to start a new trend. So coming back to our charts and our candlesticks, we want to look and try to identify our swing highs and our swing lows. So again, anytime the price reaches a certain area and has a major shift in direction, that is a clear sign that it could be either a swing high or a swing low. So price came up here and it made a lower high in relation to its previous high, which is at this level right here. Or this level here, you can count that too, but we'll try to keep it really simple. And price continues to make lower highs down here. This is why trends are so important. To be able to identify your trend is the starting point to be able to take a trade. You never want to trade against the trend, especially on the higher time frame, because the trend is telling you where the market is going. So since we are in a downtrend, we can expect price to continue to make lower highs and lower lows. And this is what we potentially look for. Again, before we're able to take a trade, we have to understand our trend. And so you guys' homework for today and for today's episode is to log on to your charts, TradingView, wherever you have them, Webull. I don't know where you guys have your charts. There's plenty of places to find some charts, but um, is to get onto your charts and then identify your major swing highs and swing lows. And again, if you guys are struggling and if you're confused, make sure you join the Discord or comment down below. I'd love to help you guys out and I'd love to help you learn this and make sure you really flesh it out, because I know trading is really confusing and really complicating starting out, but once you get it, and no one can take that away from you. It is such a high value skill and it is such a thing that you can take and run with in life. And so believe in yourself and believe that you have the capacity to do it, because chances are, if you're watching this video, you do. So start off by going onto your charts any time frame. It doesn't really matter because, again, this is just practice, but identify your major swing highs and your major swing lows. Now, fortunately for us, price action has given us a very good opportunity to take a selling position in this downtrend. So we can see that price is consistently getting lower and lower in relation to its highs. On this 4-hour time frame, we have a low right here that was broken, creating a lower low. So price typically wants to pull back to these areas that it breaks. So as you're marking your higher highs and your higher lows, you'll notice that as price makes new higher highs and higher lows, it likes to tend to come back to these levels and retest them. So price broke from this level here, and then it came back to retest to continue lower. And that creates a very good opportunity for us to take a position. Similar to something like this. Now, I know these are pretty confusing concepts and things might not click as smoothly as you want them to day one, but you have to stick with it and you have to keep throwing yourself at the wall. I'm going to try to show you exactly how I mark up, not how I mark up my charts, but I'll show you exactly how we use these trends to take our positions. And so remember, in an uptrend, you shouldn't have lower lows. And here at this moment right here, price made a lower low. So now that price has made a lower low, I'm no longer looking for buying opportunities. Now I'm going to be looking for selling opportunities. So we don't immediately jump in the second a low is taken on any type of side of a trade, whether it's a buy side or a sell side trade. We know that price likes to come back to these levels to retest them. That's why we get these little zigzag movements where price likes to break, come back, and break, come back. We can see that once this low was taken, price is starting to form a downtrend of lower highs and lower lows. Now, what we do is we'd wait for price to create this lower high. And then once that lower high has been made, we're going to wait. And of course, this is our last high, so we don't want to see price come above this level. So once we see that price has made a lower high here at this level, now we can see that it might be a good opportunity to take shorts from this position and lower because that fits the bias for our trade. And of course, we know in a downtrend, we want to make lower lows. So what that would look like is something like this. So we'd put our stop loss above the previous swing high and our take profit at the next low. And then we would let our trade play out. Okay, so as we can see, price continued to form a downtrend. So now we can see that price action has given us now after it's given us a downtrend indication, we have now switched from a bullish environment to a bearish environment. Of course, long term it was bullish because the higher time frame was bullish, or what. So as we can see, price is now in a downtrend, and we can use our highs and lows to take a position to reap benefits off of that. And it's pretty simple. It's that simple. Of course, there are things that I didn't really get to explain in this first video. It's just the first video. Of course, I'm going to be going over more in-depth concepts, entries, and market structure shifts, and I will try my best to break things down as clearly as possible. But this is where you guys come in and you let me know your questions. You ask me where things I might have missed or things you might not understand. And of course, guys, make sure you join the Discord community so that you can come to me for help. I want to help you guys. I want to show you guys the way, and I want to show you how I have made this into something that I do every day. Because we were able to analyze our market structure and identify our trend, we were able to actually take a position in relation to the trend to reap benefits off of said trend. And so it's that simple. It's pretty simple. There's a lot that goes into it, and the devil is in the details. But of course, I will take my time with this, and I want you guys to join the community. I want you guys to comment and ask questions and help each other out so that you guys can take this and apply it to yourself and then reap the benefits that are to come of this. And so again, if you guys do have any questions, make sure you guys comment them down below. Ask me, ask away. I'd love to help out. You guys can reach out to me personally on Discord, and we'll see where this journey takes us.